Hi, I'm Brien Lundin, and I am speaking to you from the Metals Investor Forum in Vancouver, talking with a lot of great companies here, a lot of wonderful opportunities in this beleaguered junior mining share market, a lot of tremendous values that are available out here right now. And one of the best, if not the best, in the industry and in our gold newsletter portfolio is Banyan Gold. I have the great pleasure to talk with Tara Christie, President and CEO of Banyan Gold, symbol BYN on the Venture Exchange. And Tara, you look at a lot of these values out there in the market, and I can't find one in the gold sector that's a better value than Banyan. I know you're happy to hear me say that, but let's prove it.
I'd love you to be telling me I'm overvalued because our share price is up that high.
Well, for the investors, we want the other end of the spectrum. We want some opportunity here, and this just reeks of opportunity. Not to steal your thunder, but you've got a huge gold deposit in a proven jurisdiction, lots of infrastructure, and you're selling for about $10 an ounce when in a normal market, such deposits, which are always in demand by the majors, such deposits typically sell for $100, $150 an ounce or more. Really, I know it seems like you're an overnight success, but it didn't take you too long. But you've done things right, done things correctly, dotting the T's, crossing the I's, as it were.
Trying to,
or opposite that. But checking off all of those boxes of potential risks that a strategic looks at, and it's a solid play and it's a growing play. So what else do you have left to say now that I haven't said?
Well, it hasn't been an overnight success, but it has been. The resource growth has been very rapid. If you look at our history, we've added 40 to 44 ounces per meter that we drilled.
Yeah,
and
amazing.
That's less than $7.40 an ounce. Like that's pretty efficient. So, some of the things that I think are advantages to us is we are very capital disciplined. We focus on spending our shareholders' dollars well. And that is both, that gives us opportunity. Like here we are sitting with a pretty strong treasury going into 2024. We've got a big resource, which we know we can continue to grow. We're starting to understand the higher grade within it, which is also really important for the payback. When you look at what this project is.
And that's crucially important for a large project of open pit grades. You want those areas where you have higher grades and you can have more rapid payback of your capital costs. You have some really nice intersections in terms of that and sprinkled throughout the deposit. And now you're kind of focusing on those or narrowing down and trying to figure out the geology and the structures.
Yeah, that's one of the benefits of not drilling through this winter. We've been so busy growing the resource, working 11 months of the year, taking at least 1 month off, not totally because of weather, partly because our team needed breaks. But now we've actually had time to really dig into the data, look at it, and if you looked at our sensitivity table, we picked 0.2 and 0.3 or 0.25 and 0.3.
Where you cut off
gave us 6.2 million ounces at 0.61. Well, if we increase that cutoff grade, you can see there's at 0.5, the overall grade is 0.95, so almost a gram. And unfortunately, in our 43-101, we only published to 0.5. But internally, we have higher cutoff grades that we can look at it. And so what we've been doing is lots of internal modeling of the structure and the geology, so looking at it from that perspective, and then looking at the cutoff grades and where those pits actually are. And then some high-level scoping study work to look at, from a mining perspective, where's your phase one mining. So if you're really going to add value and design a project that's going to have the highest NPV or IRR, you superimpose those mining areas, phase one mining areas, on where and you want to drill it out to get high grade, on the geological areas that are showing its higher grade, along with where that geological resource modeling is showing you its higher grade. And this is an inferred resource, so it's not a true mining pit, right? It's a pit-constrained resource. So as we move forward, and eventually we'll want to move this up to indicate and get more confidence in it, but we'll be able to spend our money more efficiently and focus on phase one higher grade mining, that areas to drill off to indicate it, if that's what we decide to do next with the work that we're doing. Plus, talking to lots of experts, we still haven't found our intrusion yet. We've drilled deep. We did a presentation.
You're surrounded by deposits that are intrusion related, and and you don't have that yet.
Not yet. We've drilled to 500 meters. We drilled the hole. We didn't advertise it broadly because it wasn't drilled to look for the intrusion. It was drilled to understand the thermal gradients, the high temperature minerals, and help give us, an idea of which direction the intrusion or intrusions might be, and also understand some of the higher grade that's going on. But we know there's power line goes down to 500 meters. That's deep. And look at deposits like Marigold. We're focused right now because the depth of the pit is 200 meters on that top 200 meters, which is likely what your economics are based on for building. But these types of deposits can be very big. And the fact that we have 6.2 million ounces in the rocks around or above an intrusion, that's very unusual. This was a very long-lived mineralizing system that created that large of a deposit.
It's the place where most companies dream that they could end, and it's really where you're starting.
Well, we're so excited about what we have and all the options we have. We can continue to grow this. Can I see a pathway to 8 million ounces? Yeah.
Well, I can see that pathway. I mean, you can just look at the map. You can look at the separate deposits and see that, they logically extend along strike, and they logically have a very good chance of connecting in some way or fashion. So the potential to really grow that resource significantly from here is there, and that's going to be important to a major mining company that would come in, and they want some upside in the project. But what strikes me is that you're also doing a lot of the work that is so important for a mining company. You're doing the technical studies, you're doing advancing on the metallurgy, the permitting, the social work that you're doing on the ground, which is a lot of times boring to these junior mining investors, but is so critically important to making a project work. So a major company doesn't want to come in there and think that they're going to have problems. And when they can come in there with welcoming arms, that is the kind of project that they're going to be looking at.
Well, particularly if we see the gold price increase that we want. Majors are going to buy some projects just to have ounces on their books, and they're going to buy some that they actually want to make this cycle and get them through the permitting process and build them. And so we want to be in that latter category. We're at the scale where they'd buy us just for the ounces. But having that really adds value. So that baseline environmental work, which we started very, very early, and we had the benefit of having millions of dollars and years of data from our two neighbors, Hecla and Victoria Gold. That can't be underestimated, the value of that data. And then we brought on Kai, so I brought on a VP of project development that has a wealth of experience, permitted one mine right beside us, but also has been part of permitting and doing that work for multiple projects all around us in the Yukon. So wealth of experience as we move into that study and technical phase, and really growing our team very strategically, so we have the right skill sets as we move into the next phase. And one of our problems, and such problems to have, is we have too many options of what we could do. And what is the market going to care about? And it's been pretty tough for the market to care about anything with juniors.
Well, most juniors right now, what they care about is how are we going to do the next financing? How are we going to pay the bills next month? You've got a fairly rich treasury that you're very careful in deploying. So you're in a really good position where you can employ it strategically and leverage that money. And you also have very little burn rate because you have income.
Well, we also have cost recovery. If you looked at the financials that we just filed, last year we had $700,000 in income from our rentals because we have infrastructure and we're very creative. And tend to be able to use our infrastructure to make ourselves some money. And we expect that'll be again this year. So that pays a pretty hefty portion of our G&A, and we expect a similar number. So that means that of the money we have in the treasury, we can spend that mostly on exploration without having to worry about where the dollar to pay the rent or the power bill is going to come from. So,
well, it seems to me that this is one of those plays, one of those projects that will be bought out by someone at some point. I would think, given the valuation at a considerable multiple of where it is today. Let's talk about catalysts as we close out for the next year. What are we looking at going ahead?
Well, with $7 million in the bank, it gives us lots of room to do exploration, particularly with the money that's going to be coming in. We're still doing an options analysis on how we're going to add the most value. That's really good for our team to have gone through all that thought process. So it might be a month or two before we actually announce what we're going to do, but be assured we're going to spend that money to add the most value for our shareholders, and we've
Yeah.
got a pretty good vision of what that is.
Because you're a shareholder yourself.
I'm a big I'm a 4% shareholder. I've got over $2 million in cash. If
Yeah.
you look at my
Yeah.
my history, and I've never, even an option, I've never sold a single option I've had to exercise, even though I had to pay the tax. I paid the
Yeah.
tax and kept the shares. So I'm pretty heavily vested. So we're going to have the results of our metallurgy. We are taking our time to do that right, because usually you put out, this is what the project is going to be, and that sticks with everybody. And having options, and we, originally everybody looked at it as a heap leach project, big bulk tonnage, but as a mill project, which we could be,
Yeah.
we're looking at very conventional processing, because we know we don't need a roaster, we don't
Yeah.
have refractory ore, CIP, CIL, and flotation. And I think there's other catalysts that are external to us, like Victoria Gold's Raven, that's only 4.5 kilometers from us, and here we're sitting with the fabulous infrastructure,
Right, yeah.
which are going to show some more synergies. I really think showing we have process option is a real value add, because not all companies build the same thing, and some people will look at us and say, wow, that's a really big deposit. I think this is a district, as I was saying in my presentation, if there's 20 million ounces within 20 kilometers, that's a district play that any majors, and with 2 operating mines within it, Victoria Gold
Right.
heap leach mine and Hecla, and maybe it's just Victoria Gold people
De-risked.
looked at, it's de-risked.
Right.
You can permit, this is brownfields with infrastructure, and
Yeah.
one First Nation that has a established permitting process in the jurisdiction. That's
And
pretty,
they've done it before.
and they've done it before. So
Yeah.
I think that's going to be a pretty major draw. And you do have to be a little bit patient in the gold mining investing business. And
Yeah.
we've seen that, but it also pays pretty good rewards. If people had
Well,
bought
yeah.
into Banyan in 2020, when we were still a 5 million market cap company, they would have done very well.
They would have, but from this level forward, this is one of the benefits of this market malaise that we're living through. Typically, you find a junior mining company that's selling for a very significant discount to where it should be in a normalized market. There's something wrong with it. What we have here is a company that seems to be buttoned down in every regard. It's got the world-class resource that the big companies are looking for, and it's selling for the current valuation purely because of the broader market situation. In a normalized market, not even a really hot euphoric market, just a normalized market, this company should be trading for 10 to 15 times its current value per ounce in the ground. So I'm excited to see what's going to happen in the weeks and months ahead. And I urge investors to take a look at Banyan Gold, really one of the big winners, I think, in this next cycle in the gold market.
Thanks, Brien. I believe that as well. And I've got lots of skin in the game. We heard
Your
the speaker
interests
say you need
are aligned.
tenacity, persistence, and conviction. And
Yeah.
that's something we have, and skin in the game. So
Yeah.
it's going to be an exciting year for Banyan.
Well, you can invest alongside Tara right now. Thank you so much, Tara.
Thank you.
Appreciate it.